Of course, the event risk is the end of the month, and what happens with the trade deal. I think everybody's now expecting some sort of an agreement so that we can move on for the time being. If the trade talks break down, I think it'll be a very big negative for the markets because, as you correctly said, that the trade data itself has become quite noisy. Earlier in 2018, we saw advancement of trade in anticipation of tariffs going up, and now you are seeing some data that is a bit more distorted because of that. You will see that sort of give and take over and over again if the trade talks become a little more volatile and not go the way I think everybody's expecting. That's some sort of a meeting of the minds between the Americans and the Chinese. The Chinese will buy a lot of American agriculture products and open up the markets for a host of American exports, and at the same time come up with some enforceable manner of making sure the technology is not shared in an illicit manner. So I think the bets are a bit one-sided. So that's one risk, that if somehow the trade talks were to not go the way the markets are expecting and were to fall apart, that could be one very big negative. But the other issue is something that Janet Yellen touched on in the interview clip that you were showing earlier, which is that the rest of the world is slowing. You see that in trade numbers elsewhere in Europe and Asia, particularly with respect to China. When will that slowdown spill over into the U.S.? Because the latest jobs numbers, the latest growth numbers, the U.S. still look pretty good. And hence, till that spillover takes place, I think the outlook about the U.S. economy will remain fairly rosy, and that's where I think the next event risk lies.
You know, you mentioned a distortion to the data from the trade issue, Taimur. So if miraculously the trade issue somehow gets either papered over or properly resolved, how much of a positive would that be to the Chinese economy, considering the Chinese economy was already slowing down before this trade issue came up?
Of course, it'll be a positive for sentiments, but beyond that, I think there are much bigger, broader issues that are hurting Chinese growth and overall outlook. I think domestic demand is the key issue here. What's happening with auto sales, what's happening with the property market, have the recent easing measures have any meaningful impact in terms of turning around intermediation, credit growth in the economy? Those are the big questions. And to me, right now, the answer to all of those questions is on the negative side. We haven't really seen the economy showing some degree of bottoming. Hopefully, if we can move past the trade war, the issue becomes less external and more domestic, because the Chinese authorities have very big fish to fry with respect to deleveraging, with respect to the property market, than having to get distracted by the fight with Donald Trump.
So is it fair to say that even if the Fed is really dovish, even if the Fed cuts rates, that won't actually make that much of a positive difference to the Chinese economy?
No, I really don't think so. I think that the Fed has limits to its actions. It can definitely buoy global market sentiments, but it can do very, very little to turn around China's domestic demand malaise right now.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.